All right, folks. It's Friday, December 9th, 2016. Welcome to my market recap. My name is Omar. I'm part of the Bullish Bears team. You can catch us at Bullish Bears on Facebook and Twitter and Instagram, but we're primarily active on Facebook. And I just wanted to talk about a market recap and just go over a few stocks and just give you guys a sense of like the patterns that I trade and just rebuying how all this works and the indicators and all those such things. All right, so let's go and this is my stocks to trade account, and here's my watch list that I had posted on the group chat last night. And again, the biggest play that's been over the last 2 days is IDXG. What I want to do is I'll open it up on Thinkorswim, and what's really cool on Thinkorswim is like if you build your watch list and you link everything. So if you link the colors to your charts, like I have them here, what it does, if I click the actual symbol, it opens up the chart. And what I usually do is I usually have two actual charts. I have one with the 1 minute time frame and I have one with the 3 minutes, sometimes the 5 minute, just depends. And then what I usually do is like I'll click, so I'll uncheck these now, but what I usually like to do, just so I know how the actual the buying and selling is going, I click level 2, which will show me buyers on the bid and sellers on the ask here. And when you have more buyers on the bid than sellers on the ask, that drives the price up. If you have more sellers on the ask than buyers on the bid, that usually drives the price down. And then I also click this time and sales, and what that does, it shows me all the sales that have been executed. So for example, somebody just bought 200 shares of this stock at $6.44 at a price of $1.38. That's what that is telling me right now. Okay. Now let's talk about this play, IDXG, right? So let's talk about what happened pre-market and then when the market opened. And this stock was gapping, started gapping pre-market at around, if I look at this candle here, let me zoom in a little more, at opening 136. Okay, I'm sorry, the price was 136. It started gapping at 840, and it gapped from 136 all the way when it opened up at the market, all the way at 156. All right, so you could have got in pre-market here. And if we're looking here, the RSI is between 30 and 70, so that's a good sign. Now you see the lines cross over, and the further away these lines are, the more bullish of a sign that is. That's like a huge buy sign. Also, you're looking at the histogram. The lighter the green, that means the stronger the price, the indicator is to buy. This is kind of sort of all over the place on the 1 minute chart. If I come here, and I'm just going to move these out of the way just so that people can see. This is a 3 minute chart. If I'm looking at the same thing on the 3 minute chart, you can see that right around here, it formed this bull flag. So people bought here in the 130 range, and they started selling, taking their profit here in the 150 range. And they got a little volume push right in here, right into the market open. So when the market opened, this is the 3 minute chart. This is the 1 minute chart. I'm looking at. I would more than likely be looking at the 1 minute chart. Now you notice these are my indicators. So this blue signifies the 9 EMA. This green signifies VWAP. This red signifies the 20 EMA. This is the parabolic SAR. These dots, and this is the 50-day moving average. These are the indicators that I told you that I used when I did the webinar. These are all the indicators that I use when I'm looking at stocks that I'm trading. So let me minimize that. So what happens? The market opens and there's a big sell-off. So these are the people that are selling their stock that bought here pre-market. They're probably just getting out because they're not sure if this is gonna rip, right? So what happens? They sell, but then, and you see the RSI is very high. So this is up. But look what happened here. Right around here, and this is right before 9:30, there was a crossover where the green goes above the red, and you notice that the MACD histogram is stepping up. The RSI here is over there, but it went below and it kind of went above it. But look what happened. These two lines got really far apart. You got a volume push, and look what happened. This broke right here. It broke the high of day. And right in this candle, right in this 170, right in this candle right here, this is where I would have bought, somewhere in here. If I was watching this right at the open, I probably would have got it executed at 170. And it went as far as 190 all in 1 minute, which is pretty crazy. You know, I would have been scared because what happened is you get this doji, so that's like an indecision candle. That means there's buyers and sellers that are pushing the price up and down, so it doesn't know where it wants to go. And then all these people that bought here, they're like thinking, oh yeah, this stock is done, so they're selling their shares. But look what happens. It goes back to the 90 MA, and this is actually a good entry point. And what happened was people saw that and they pushed and they bought here, and you notice that everything is still bullish, okay? And what happened was you get that second run. So you got that gap up. Once it hit the 90 MA at 170, it went as high as 188, and then it kind of got back down and touched the 90 MA. So the people that bought here and here started taking their profit here. And then it got one last push here at the 90 MA because it didn't break it. This 90 MA is acting sort of as like a support level, all right? And it gapped up one last time, and then at 198 it sold off. So if I come here and I scroll back, look what happened. And I'm gonna put a 5-minute chart, 5-minute chart, just so because it looks a little bit cleaner. But look what happened. You got the pre-market, you got that first run up and pullback, then you got the second run up and pullback, pre-market, and then you got that last gap before the sell-off. And what did I say in my PowerPoint when I talked about, in my webinar, and I have a screenshot of it in my PowerPoint, is that, let me see if I can find it here. There's two types of momentum plays, right? This was typical momentum play, right? So I typically trade the 1-minute chart. The stock was on my watch list Thursday because it held its highs. I look for bull flag patterns. Usually get 2 pullbacks, then a sell-off, especially around whole numbers, $1, $1.50, $2. The pullback is where you enter the stock. So, so with that said, that's what happened. So people that were looking at this, some people were looking at the 3 minutes, some people are looking at the 5-minute. But what happened was people started buying here, and you got that first pullback. Then people bought here, they got that second pullback. And then this was the last run before the sell-off. And look, right before $2, it sold off. And this is way above the indicators. And look what happens. It gets overextended. The MAC D2 lines rolls over, and this is where people short. So people, there would have been people that were probably trying to short it right into the whole number, knowing that this is a resistance point. And people would have bought shares to short the stock somewhere here. So, you know, the way they short it is they come here and they click this sell short, and they put the number of shares that they want to short at the price they want to short it at. And then, you know, they get executed. So let's say you got executed like at 180, and you see the price go all the way down, and you see it gap up, but you see these two lines still crossed over the way they are, which is very, very bullish. And maybe somebody covers here. So you could have made money, like you could have got short here like in the 180s and covered in the 120s and made like 50 cents on the short side. So you could have made money going long and going short, okay? Just like I explained in my bull flag, in my momentum play, okay? All right, so that's a pattern that we talked about, all right? Let's talk about a couple of other stocks. All right. Let's talk about. I'm gonna look up BTTQ. This was another one that was on here, but I want to talk about how we talk about momentum plays, right? And we talk about patterns that we trade, right? So I talked about. All right, we're looking for patterns, right? Breakouts, stocks that are making new daily, weekly, monthly, or yearly highs. Breakdown, stocks that are making new daily, weekly, monthly, or yearly lows. So that's when you're shorting the stock. Dip buys, buying a stock after a major sell-off as close to support as possible. Usually happens after a morning panic at the market open. Red to green plays, a stock price that increases over the previous day's close price, or green to red plays, a stock price that decreases below the previous day's close price. So BTTQ is an example of green to red / dip buy. So you had 2 entry points in this stock if you were watching this stock. And my watch list was pretty good because the momentum for not all the stocks, but a lot of the stocks were big swings at the open. So let's say you're watching this at the open, and I'm going to go back to my 1-minute chart. Okay? You're watching this at the open, and you see at the open, this thing it's saying it's overbought, but you got this little bullish sign here, and I love this stock in the sense that the numbers it moves like in $3, $4 intervals. So it opened right at 1383, and it went from right, it went from green to red, and in that one moment it went from and this is happened really fast. It went from $13 to 14.25, and it hit a high in 4 minutes. And then look what happened. Then you started to see the rollover, right? So you see that the RSI is over 70, so you know it's gonna pull back, right? And let me just get in even closer. And then you see it starts to roll over. The stock starts to roll over here, right? Things starts to step down, right? MACD stepping down. The lines are rolling over, and all of a sudden it goes from green to red, and that is a sign for people to short the stock. And what they do is they short the stock using the previous day's close price as their stop loss limit. And look what happened. As soon as it broke all past, this went from 1365 all the way down to $10.55. And this happened in a matter of, I want to say, what, 9:39 to step down? And by 9:46, you would have made $3 a share. So let's assume you had a nice size account. You got 20,000, $30,000 to play with. And you would have bought yourself, I don't know, let's say 1,000 shares, right? And you would have got executed 1,000 shares somewhere over here at $13, like $25,000 position, all right? 1,000 shares. You would have made $3,000 in 10 minutes, okay? Now let's say you got a small account, all right? So you already got 5,000, right? And you got your stop loss limit here. So let's say you decide, I only got $5,000 dollars. I'm gonna buy 200 shares. You would have bought 200 shares. You would have made $600 in 10 minutes. Okay, that's momentum trading. So you can make money going up when the stock goes up, and you can make money when the stock goes down. Now let's talk about the dip buy. Okay, let's talk about the dip buy. Now, because this stock collapsed so quickly, when stocks collapse so fast, when they go from one extreme to the other extraordinarily quickly, that's your dip buy opportunity. So there's people who their whole strategy is looking for stocks where their RSI is below 30, because they know that when they're below 30, that that means they've been oversold, and that people are gonna buy the stock. So look what happened. It collapses in 10 minutes all the way down to 10.55. It finds support. So what you do is you put that trend line here, right? And then look what happens. It starts rolling over, and this is a super bearish or bullish sign. And people could have went long right here. And this is what a lot of people do. Is what Tim Sykes teaches. Some of the other traders teach. They trade that. They call it, like, when you have that panic, you get an opportunity to buy on the dip. So you get that, what they also call a gap fill, where you're filling the gap because there's such a big gap between the price that it sold off and the price that it found support. And you could have bought here, and you could have made money swinging this back up from, let's say and I would have probably bought somewhere here when I seen this start roll over somewhere over here, because this is where it was a bull flag. It's a small bull flag, but it formed one. And right in here, I probably would have bought right when it bought, and these all act as resistance barriers, but I would have still bought it anyway and used the low of this candle 1134 as my stop loss, and I would have and rolled this back up to about $13. So I mean, if you're a sophisticated trader and you understand patterns, you can make money shorting stock, longing stock, buying dip buys. And again, this is all part of the PowerPoint that I talked about, right? I talked about dip buys, buying a stock after a major sell-off as close to support as possible. Usually happens after a morning panic, after the market opens. Okay, so and let's look at a couple of other stocks really quick. Let's look at one or two. I don't want to make this too long. Let's look at SDRL, which was another stock that gapped up this morning. So we'll look at one that went up, and then we'll look at one that went down. Two more. So, and I'll go back into Thinkorswim. So SDRO is another stock on my watch list. So you could have made some nice money on this today. And this wasn't an expensive stock. And this is a formal runner. This is one of those shipping companies. They just keep gapping. Usually what you should do is when you get into these trades, you can click over here, live news, and you can see what it was. And I think there was some sort of U.S. rig that I think, let's see. There was some sort of news. I don't know why it's not opening. Click. It's not opening. I don't know. Maybe it's because I'm in this webinar that it's not. Oh, here it is. So it's just slow. So the number of oil rigs operating in the U.S. climbed by a whopping 21% in the week ending. This is what drove. This is not a shipping stock. I'm sorry. This is an oil stock. And based on this article, this is what drove the price of the stock to go up really, really quickly. And what happens is, right, we talked about. So this is a perfect example of you get those gap ups and then the sell off, right? Let's go back to my PowerPoint where I talk about this, right? When I do the webinar, again, this is that typical momentum pattern where you get the two bull flags and then it sells off around the whole number, right? The pullback is where you enter the stock, right? So if I go back, okay, let's look at this. All right, so the market opens. Now, if I have my 3 gap candles, I got my new highs, my highest percentage gains. This is on my watch list. I'm watching it. Right here, this is popping up on my scanner. Okay, and look what happens. It's hard to tell, but once it breaks this, what did I say? We break daily breakouts, right? Let's go back and let's look at this really quickly so you can see, right? You look for patterns. Breakouts, stocks that are making new highs, right? New daily, weekly, monthly, yearly highs. So people are watching this and they see right here, this is where it hit its high, right? So what people are doing is they're drawing a line. So you go here and they're drawing a line right there. And as soon as it breaks the high, look what happened. There was a push. And look, over here, it's already bullish and all these signs are bullish. Even though it's oversold, meaning that this is gonna crack down. This did its first. It's hard to tell, but this was a bull flag. This was its first bull flag. This is its first gap up. This is the second gap up here, right in here, and you see it touches the EMA, and then you get that last push. And that last push, it went up from 355. I would have bought over 350 because and using 350 as my stop loss, just because a whole number is a psychological resistance point. And I would have sold right up into the gap. And look what happened. It went up to 370, and look what happens. It starts going up. So somewhere, as soon as this kind of started turning, I'm out. And this is where everybody who bought in here kind of took their profit. And it hit the 9 EMA, and then it kind of like gapped up again. And it just kind of went sideways the rest of the day, and it kind of gapped down. And you kind of could have shorted this too if you wanted to at this point. Like, one thing I haven't taught you guys yet was, and I'll, when I get more into more sophisticated details, but what a lot of people do is when a stock is running one way or another, they put what's called a trend line. And what it is that you put a trend, you put the line as it's gapping up, like as the candles are gapping up. And let me just show you guys, and I'll just go back to pointer. So you're watching this, right? And you're seeing it gap up. And as soon as you start seeing it gap up, you put that trend line there. And once this candle breaks the trend line, then you know that there's like a shift there's a reversal in the stock. And once it broke this trend line here, you see how it's reversing. And a lot of people use these trend lines to short, or to go long. So when they see the reversal, a lot of people probably would have shorted right in here at 385 and rolled this down to about 370, and this got as low as 375. It could have made 10 cents shorting this, but you got to be fast because this is happening in 1 minute candles. I mean, you could technically do it, but but these are the type of patterns that people do all day. Okay, and just to remind you guys again, so I'll remove this. I'm looking at both. I'm looking at the 1 minute chart, and let me just put this back out here. I'm looking at the 1 minute chart. So if I'm looking at this, I'm looking at it here. And I'm looking at it here. I'm looking at this 3 minute chart. This is the 3 minute chart. So I'm watching it here as well as here. All right. But I use the 1 minute chart because these stocks are like very volatile and they move really, really fast. So, the 1 minute chart kind of gives you a sense of how it's going. But the 3 minute chart gives you like a much clearer indicator of what's going to happen with the stock. So I like to use both. And if you see on the 3 minute chart, I'm sorry, this thing, look at the bullish sign. Look how separated these things are. The more separated they are, that means that's a strong signal of whether it's bullish or bearish. So it's really strong up, and then look, when it crossed over, it got somewhat strong down, and you see it slowly collapsed from 389 all the way down to 366. So you could have made money going both ways. All right, you could have made money going both ways. All right, so let me close that out. I'm sorry, yeah, this is a much cleaner look. Sorry about that. But you could have made money going both ways. Let me show you one other stock, just to show you like these red to green, green to red sort of things. Let's look at, I think BX. What did BX do? Let's look at that. I think BX actually ripped at the open. I don't know who bought this, but all right, BX is a good example of green to red, red to green. This does both actually throughout the day. So this is the previous day's close price, and what happens is the market opens, it dips below it, right? And that's sort of like that dip buy where people kind of see it fell off, they see it finds support here, so people put the trend line. And you know what? Let me put it on Thinkorswim because that's where you guys really are going to be using them. So here's his BX, right? And the actual previous day's close price was 29.80. So so I'm gonna put a trend line for 29.80 right here. Okay, and I'm gonna add a drawing, and I'm gonna add price level, and I'll do it 29.80. All right, good. So now you see now you can follow it. And let me go back. Once I do the drawings, I go back here and I just go to pointer so that it doesn't draw anymore. So let's look at this really closely. So what happens? The market opens and it sells off. Now, let's say you're following my strategy and you're saying oh, okay, once it breaks this, I'm gonna short it using this as a resistance point. You would have not made. Sometimes these things are like they fail. They don't do exactly what they're supposed to do, right? You just trade patterns. Now, if you're risking this and you said you got executed somewhere here, so if 29.80 was the previous day's close, and you're like, all right, I'm gonna put a stop. I'm gonna short it. Well, the indicators aren't very good here, so you gotta watch the indicators, and you see it's not very clear, defined. But look what happens. It goes from red to green, so it breaks above it, and then what happens? It consolidates. It consolidates, and then right here. So if you add a drawing and you're adding a price level, this is the daily breakout right here, and it went from red to green, right? And you're seeing the indicator. Look what happens. It rolls up. The MACD rolls up, and the lines are starting to separate. You see the MACD roll over push, and there's a big push where this thing went from, and right here, like honestly, me personally, because I know $30 is a psychological resistance point, I would have waited to see if this would have broke 30, and at 30.01 I would have bought, and I would have used $30 as my stop loss. And look what happened in that 1 minute candle, and this is why it went up, that because everybody's watching the stock, everybody's seeing that it broke the daily high, because this is popping up on your new high candle scanner. And then what's happening is, but people are still a little hesitant to buy it because they don't know if it's going to break above 30. But once they see it hit 30.01, they're buying. And in that 1 minute, you could have went in and made yourself like 20 cents. But this is a very expensive stock. So, you gotta, a lot of you are probably not going to look at this, but that's what happened. And it got pretty bullish. And it kind of pulled back, and then it kind of gapped up, and then it kind of pulled back, and then it consolidated. And the rest of the day, this thing kind of like consolidated. It actually rolled over here, and maybe you would have shorted. I don't know. Somebody might show it. This stock is not very clean. But I do want to show you how, towards the end of the day, this thing kind of ripped up again. So it kind of went down to 30 and then 20, and then it kind of consolidated the rest of the day. But then at the end of the day, people were taking their profit. And then right here, this was the previous day. Look, some people could have shorted here, and they could have made themselves like 30 cents. So, these patterns help kind of figure out what a stock is going to do. You can look at a couple of other stocks. Look at Fran. Fran is like a perfect example where the red to green it would have worked really really well. And it works well not on all stocks, but the majority of times these patterns are really good. So let me look for Fran here, just so you can see. This you can see it because it's really really clear here. So if I pull up Fran, this was the previous day's close, right? So if I'm looking at this and so look what happens. It kind of like does it and it kind of goes down and then it kind of goes above, back from green to red, and it doesn't know what it wants to do, right? So this is like a channel. So what I would do is, if I'm watching this and let's say I want to play it, like I don't want to look at a lot of stocks, like I'm for whatever reason I'm like fixated with a stock. I find, all right, this is support, this is resistance, and it kind of like channels. You see, though, look what happens. It makes a lower high, and this is the breakdown. So remember, we do breakouts, but we also do breakdowns. All right. So breakdown stocks that are making new daily, weekly, or monthly or yearly lows. Right. So if you're watching this stock, right, you notice there's two bearish signs. It dipped back below and went from green to red, right? And this is around, what time is this? 10 o'clock. And then it kind of like touches it kind of like touches sort of like for a second there, it kind of goes above red to green, but then look, it just breaks down and collapses. And then the rest of the day, it just collapsed. So if you would have like got in here and just rolled this down, you would have made this thing, you would have made over $1. All right, this thing just completely collapses. All right, and I'll show you, and just to show you, I think a swim. Okay, look what happens once it breaks down at like that 10:30 mark. All right, look, the candles are below the indicators. Those indicators now serve as resistance points, and you just see it's just collapsing. And if you look at the indicators, it's just sort of just dead. I mean, you see it a little bit here, but then it just keeps collapsing and collapsing and collapsing. And then this is where it found its total bottom. And then some people literally see this RSI here. They look for stocks like this where the RSI is below 30, and they see that big momentum and they dip by it. So some people might have. And look at the candle. Look at all the strength here. People have scanners where it shows them stocks where the RSI is below 30. Okay. And they have something where it tells them like these parameters, and they pop up on this thing, and they just quickly jump in and scalp and make money. And you could have, once it found support here, you could have, so you add your drawing and you do your price line or trend line or whatever you're comfortable with. You put the line there just to signify find support. And then at 21.19, you could have rolled this back up all the way to 21.60, and you could have made yourself 40 cents on the upswing. So there's people that do this all day. This is what momentum trading is all about. But normally I'm not looking at this. I'm trading like the first hour, and I don't have the luxury because I have a job. I can't sit around. I'm lucky if I could find 30 minutes, an hour to sit at my desk and do this. And I'm looking at that first hour. And that's when the most volatility happens. If you just look at most of the stocks on my watch list, okay? If you look at most of the stocks on my watch list, most of the stocks, when they make their moves, they're making them right at the open. If you notice, look what happened here. This stock, it kind of collapsed, and then it went from green to red, from red to green. I'm sorry, green to red. You could have came right here and you could have shorted, and then once it found it, you could have dipped bought and rolled it back up. But if you notice, that's where most of the volatility happens. So with that said, my dinner's here, so I'm gonna eat and I'm gonna stop this. And this is my scanner for the play, so don't worry, I'll do my watch list for everyone. I'll make another. I'm gonna make an actual other Thinkorswim another video showing you how I set all this up. All right. So with that said, guys, hope you found this valuable.